Today on Yeti at Large, beware of the Ides of March in the form of bank failures and questionable utility services.
Hi, and welcome to Yeti at Large. This is a channel focused on making the most out of what you have, no matter where you're at. Thanks for tuning in and helping out.
Bank failure has been in the news a lot lately, with the Silicon Valley Bank failing in a galactically horrible fashion. All of the earmarks were there of excess, greed, lack of respect for fundamental fiduciary principles. They paid themselves bonuses, sold their stocks, and then let depositors left holding the bag. Everybody's rushed to circle the wagons to say that they're going to take care of the depositors, etc., etc. But the ripple effect is going to be huge. And it got me thinking a lot more about the bank failures and the way I grew up in the 80s. If you go to Wikipedia, it will show you the number of banks that fail every year. And some years there's been very few, other years there's been a lot. But there has never been anything quite like the savings and loan implosion in the late 80s. I typically bank at credit unions. I've done all of my vehicle loans over my lifetime through credit unions. And I find that a credit union model is much less prone to failure. Not completely immune, but much less prone. And most of those are consolidations where credit unions have joined forces. I still belong to a credit union to this day, and I have very little fear of my deposits not being available to me. A credit union is made up of members, not depositors. The members vote on leadership, and they're typically a not-for-profit entity, whereas a bank is a for-profit entity that takes your deposits and invests it to turn a profit for the shareholders and or the boards. So back to the savings and loan implosion of the late 80s. Now, I'll tell you, as a budding pastry chef right out of culinary school working at the Ritz-Carlton, I wasn't interested in watching what my local bank was doing or my credit union. Didn't even occur to me to keep an eye on that. But I was an unwitting participant to have a front row seat to one of the greatest financial collapses in modern history. During the savings and loan crash of the late 80s, if you lived through it, you remember it. And if you're a little too young for that, just Google it and you'll see how galactic it was. 747 savings and loans collapsed in just the span of a short year and a half, 2 years. The model came up, they were over leveraged. There was economic downturn, and the insolvency rate was insane. Now, while I was at the Ritz-Carlton, that was in the Esplanade, 24th Street and Camelback in downtown Phoenix. That building was built by the Esplanade Group, headed up by Fife Symington, who later became the governor of Arizona, who later was convicted on several financial-related crimes. But his group put that building up, and they were connected intrinsically with Lincoln Savings and Loan. That was headed up by Charles Keating. Keating was the poster child for the savings and loan, and his offices were just a couple doors down from the Esplanade building where Fife Symington was, which is a couple doors from the Ritz-Carlton, and all of those were under the same financial umbrella. When you're in a large resort working in the kitchens and the service areas, you get used to seeing dignitaries in the back corridors avoiding the public. Anybody out there that's watching this that's worked in the back of the house at one of these large resorts or banquet halls, please leave a comment down below and share your experiences. Everybody's seen the image of the Secret Service moving the president or the congressman through the back of the house. We used to joke that it was Reagan and Gorbachev, but it wasn't. It was Symington and Keating coming through the back, and they met there frequently. Not only did when the savings and loan bust happened, that Lincoln Savings and Loan was forefront in that, there were political officials, later known as the Keating Five, who were also very immersed in that. And again, if you lived through that, you remember who those are. The one member of the Keating Five that I'm going to focus on was also another individual that I had firsthand acquaintance with and knowledge, and that was John McCain. Now, being a chef in Phoenix in the 80s, I knew the DeConcinis, I knew the Meekums, the Symingtons, I knew and loved Rose Mofford, and I knew John McCain. He didn't know me from Adam, but I knew him. I catered several parties at John McCain's houses and office buildings over the years, making that side hustle money. And I saw a lot of things behind the scene, and this isn't going to be a trash on John McCain. You have your own opinions. You can go that route. But when I tell you that I interacted and I knew these people firsthand, it wasn't as a business partner, an investor, a trusted confidant. It was just as the chef in the back corner that they had no idea was listening and paying attention to what they were doing. I saw a lot of interactions moving through those back rooms. People who had a vested financial interest in a business dealing with regulators, with auditors, with investigators. This day and age, it doesn't pass public scrutiny. Those relationships, when someone who's on a Senate hearing committee or has direct legal oversight of policy and law and regulation, interacting with the people that most affected by that, that's not appropriate. And us back of the house people, we see that stuff. We may not fully understand it at the time, but you're not invisible. The moral of the story here, all of your actions need to rise above the level of impropriety. We used to say in police academy, your mother, your brother, a lawyer, and a cop. If all four of those people approve of that and you could put that on a headline test, much of what I saw from the back of the house didn't pass that headline test, and history has proven that out. What I learned from it, though, was not to trust these financial institutions, that they didn't have your best interest in mind. Whether it was taking depositor money, taking most of that, rolling it into Michael Milliken's junk bonds, or long-range treasuries with low yield, or risky green energy investments, I learned that I was going to be very careful where I trusted my money. And granted, I'm a small fish in a big pond, but by choosing which pond to swim in, you can affect your family security and your outcome. Are you involved in high-risk investments right now? So no doubt we're going to see more banks fail, but my motivation today is to talk about the connection between utilities and banks and the similarities thereof. Many of these utilities act very much as investment vehicles. They take a lot of that money and they invest it. I want you to consider your banking options and where your money is, but the utilities that you choose to do business with. So the tale of two tanks might be a little bit of a microcosm for that larger public utility issue I was talking about. The white tank, AmeriGas, large multinational, clearly international conglomerate, closed all their local offices. 1-800 number takes you overseas. They read you the script. It took 3 months to finally reach a human being, and that was after we had canceled our service and they told us they were going to pick their tank up. They left us high and dry in the worst winter in just about recorded history in northern Arizona. The Tan Tank, a local company with people with a local office acquiring domestic gas and available at a phone call. Great service, great people. We changed our investment and moved to a local company. If you look up AmeriGas online, you'll see the number of complaints totals into the tens of thousands. Now granted, we can't ditch Arizona Public Service, APS, for our electricity, but we've taken measures to shore up that we can provide our own electricity should we need to. And one of the ways we can do that is the generator hooks directly up to the gas. So for so many of us, buying a house and being locked into our utilities, electrical, water, gas, even to a certain degree, internet and phone, you have such few options about shopping around, which makes knowing what your utility company is doing important. Now you can invest in some of those utility companies. If you do a quick Google search, you can see options to invest, for profit. But on the other side of that coin, what is your utility company investing in? What is their financial structure? Now where we live, we have very small utilities and very large utilities. For example, this is where our water comes from. We have to haul water to our property and fill a large tank. That may seem like a real hurdle to some people, and to other people it seems like freedom. We got a choice of about a half a dozen wells that we can purchase from. Our water is falling on us right now. This is the water we use, and it gives you a little bit of freedom, but it also requires a greater deal of participation and responsibility. That being said, our electricity comes from a very large conglomerate style utility. We have the ability, and we increase it every year, to create our own electricity, to store our own electricity, and to create that independence. If your bank has failed, you need to realize that those larger utility companies can and will fail if they're making the same risky investments and overextending. So a lot has to do with the types of banks that you choose to do business with. Now you take your local small town bank here, they're going to have a limited scope of their investments and their affiliations. You invest in a much larger national bank and they may have such resources that they don't feel market shifts. But when you're in those mid-level banks, you really need to be careful and keep a close eye on what the bank activity is, the kind of investments they're making, and the kind of returns that they're getting. Now, I know a lot of you have said you don't have time to babysit your bank, but you really need to vote with your dollars and take your money where it's going to serve you best. I challenge you to at least spend 1 hour every so often just looking at what the bank's doing, what their financial health is, and where they're going from where they're at right now. So that's our look at the bank failures of 2023 from an historical lens of the savings and loan failures. That's our look at how utility companies represent a lot of the same strengths, opportunities, risk, and weaknesses as the financial institutions, and some of the things that we're personally doing to mitigate those exposure to risk. If you've been watching this channel for any length of time, you're well aware of the fact that we look at things in somewhat of an unconventional lens. That being said, something to consider. We're very grateful that you're here, that you're coming along for the ride. Please like and subscribe. Please share this channel with a friend.